Good morning, Forex traders, and welcome back to Market Meridian Finance. Today is April 21st, 2026, and we're zooming in on a critical relationship that every Kiwi dollar trader needs to master, the US dollar index and its direct impact on NZD USD. If you've ever wondered why the Kiwi swings so violently in tandem with the US dollar, or how to turn USD index moves into profitable NZD USD trades, this is your complete, step-by-step guide for today's session. Why the USD index is your Kiwi trading compass. First, let's get back to basics. The US dollar index, DXY, measures the US dollar's strength against a basket of 6 major currencies, including the euro, yen, pound, and Canadian dollar. When the dollar rises, the Kiwi almost always falls, and when the dollar weakens, the Kiwi finds its footing. But why is this correlation so reliable? Two key reasons: reserve currency dynamics. The US dollar is the world's primary reserve currency. When investors flock to safety, they buy dollars, and risk assets like the Kiwi get sold off. Trade flows. New Zealand's economy is heavily dependent on exports of dairy, meat, and timber, which are priced in US dollars. A stronger dollar makes Kiwi exports more expensive for global buyers, weighing on the currency. Conversely, a weaker dollar boosts export competitiveness, lifting the Kiwi. This inverse relationship is so consistent that DXY's 30-minute, hourly, and daily moves often lead NZD USD's price action. And today, we have a crystal clear example of this playing out in real time right now. USD index trading at 98.070, down 0.16% on the day, with a session range of 98.005 to 98.497. Let's pass the technicals and moving averages. The 5-period MA, a yellow, 98.067, is just barely above price. The 10-period MA, blue, 98.061, is nearly flat, while the 20-period, pink, 98.110, and 40-period, red, 98.202 EMAs are sloping sharply downward. This tells us the short-term trend is bearish. The dollar is under pressure, with price action stuck below the longer moving averages, a classic sign of weakening momentum. MACD, the MACD histogram is still in negative territory, but the red bars are shrinking, and the signal line is starting to curl upward. That's a hint that bearish momentum is fading. We could see a bounce in the dollar soon, or at least a pause in the sell-off price action. The index hit a low of 98.005 in the early hours of April 21st, and is now consolidating just above that level. This is a key support zone. If USD breaks below 98.00, we could see further dollar weakness, which would be bullish for the Kiwi. If it bounces here, the dollar could retest the 98.20 to 98.30 resistance area, pressuring NZD USD lower. Now you see NZD USD 30-minute chart, which is mirroring USD index moves perfectly. The Kiwi is currently trading at 0.58901, up 0.15% on the day, with a session range of 0.5848 to 0.58949. Let's connect the dots of moving averages. The 5-period, 0.58896, 10-period, 0.58891, 20-period, 0.58870, and 40-period, 0.58808, MAs are all sloping upward, with price above all of them. This is a bullish short-term trend, directly matching DXY's bearish momentum. MACD, the MACD histogram was deep in negative territory earlier this week, but has since flipped positive, with red bars peaking and now starting to pull back slightly. This is a sign that bullish momentum for the Kiwi is strong, but starting to cool off, again, mirroring DXY's fading bearish momentum. Price action, NZD to USD bottomed at 0.58 on April 20th, right as USD hit its recent highs, and has rallied steadily since, hitting a high of 0.589 this morning. The pair is now consolidating just below the 0.5900 psychological level, which is a key resistance zone. This isn't a coincidence. Every tick lower in USD index is translating to a tick higher in NZD USD, and vice versa. This is the inverse correlation working at its finest, and it's your edge as a trader today. Before we talk about trade setups, we need to map out the critical support and resistance levels on USD that will dictate Kiwi dollar and UD dollar trading path today. These are the zones where price action is most likely to reverse, pause, or accelerate, and they're non-negotiable for your trading plan. USD support zones: immediate support, 98.00-97.95. This is the low from today's session, and a major psychological level. If USD holds above 98.00, we could see a short-term bounce in the dollar, which would trigger a pullback in NZD and USD. A break below 97.95, however, would confirm a continuation of the dollar's sell-off, opening the door to further Kiwi upside. Secondary support, 97.75-97.70. This is the next major support level, aligning with the April 19th swing low. If USD breaks below 98.00, this is the next target. A move here would be extremely bullish for NZD and USD, potentially pushing the pair above 0.5920. USD index resistance zones: immediate resistance, 98.20-98.30. This is where the 40-period MA, 98.202, sits, and it's a key level the dollar has failed to break above multiple times in the last 24 hours. If USD bounces from 98.00, this is the first stop. If it fails to break above here, the dollar's bearish trend will remain intact, and NZD ANDST will continue higher. Secondary resistance, 98.50-98.60. This is the high from today's session, and the peak of the dollar's recent rally. A break above this level would signal a trend reversal for USD, which would trigger a sharp sell-off in NZD and USD, potentially pushing the pair back to 0.5850 or lower. Now, let's turn yesterday's Kiwi dollar and USD dollar trading performance into 3 actionable trade setups for today's session, tailored to different risk profiles. Whether you're a scalper, a swing trader, or a cautious observer, there's a setup here for you. Setup 1, bullish Kiwi play. If USD breaks below 98.00, this is the primary setup, aligned with the current short-term trend. Trigger, wait for DXY to break and close below 97.95 on the 30-minute chart, confirming the dollar's bearish. Continuation entry, go long NZD USD on the break of 0.5900, or wait for a retest of 0.5890 for a better risk-reward entry. Stop loss, place your stop just below today's session low, at 0.5845. This is a level where the bullish thesis would be invalidated. Targets: first target, 0.5920, previous resistance zone; second target, 0.5935, aligning with DXY's test of 97.75 support. Why this works: DXY's break below 98.00 confirms the dollar's weakness, which will act as a tailwind for the Kiwi. The MACD on NZD USD is already positive, so momentum is on your side. Setup 2, bearish Kiwi play. If DXY bounces off 98.00 support, this is the counter-trend setup, for traders expecting a short-term dollar bounce. Trigger, wait for DXY to bounce off 98.00 and show bullish reversal signals, like a hammer candle or MACD crossover. On the 30-minute chart, entry, Go short NZD to USD on a pullback from 0.5900, targeting the first support zone. Stop loss, place your stop just above today's high, at 0.5905. To avoid false breakouts, targets: first target, 0.5870, the 20-period MA, where buyers may step in. Second target, 0.5850, aligning with DXY's test of 98.30 resistance. Why this works: DXY's bounce would trigger a normal retracement in the Kiwi's uptrend, giving you a chance to profit from the pullback before the trend potentially resumes. This is a scalper-friendly setup, with a tight stop and clear target. Setup 3, range-bound scalping play. If DXY trades between 98.00 and 98.30, if DXY stays stuck in its current range, NZD USD will likely trade sideways too. This setup is for scalpers looking to capitalize on choppy price action. Strategy: buy NZD USD near support at 0.5870 to 0.5865. Sell near resistance at 0.5895-0.5900. Stop loss, 10 to 15 pips on each side. Since range-bound moves are often quick and noisy, targets, 15 to 20 pips per trade. Taking profits before price hits the opposite end of the range. Why this works: when DXY consolidates, NZD USD loses its trend and trades in a tight range. Scalping the support and resistance levels is the safest way to trade in this environment, avoiding the risk of being caught on the wrong side of a breakout. Final recap: your Kiwi trading checklist for today. Before you start trading, run through this quick checklist to make sure you're aligned with the plan. Monitor USD Index first, not NZD and USD, every 30 minutes. Check USD Index price action at the key levels MENTIONED. Wait for confirmation. Don't enter trades just because price is near a level. Wait for a break, a bounce, or a candlestick reversal pattern to confirm the move. Stick to your stop loss. No matter how confident you are in the setup, never move your stop loss further away. Scale out of trades. If you hit your first target, move your stop loss to break even to lock in profits. Stay flexible. If USD breaks out of its range unexpectedly, adjust your plan accordingly. The market is always right. This is your complete USD Index powered playbook for trading the Kiwi dollar today. Remember, the USD Index isn't just another chart, it's your compass for navigating NZD USD's moves. If you found this analysis helpful, hit the like button, subscribe to Market Meridian Finance for more daily currency setups, and drop a comment below with your thoughts on today's Kiwi dollar trade. The next video is about how to trade Aussie dollars today. Trade smart, stay disciplined, and we'll see you in the markets.